Welcome to Financial Accounting. My name is Richard Fisonga and I am your financial accounting tutor. In today's lesson, we look at errors not revealed by the trial balance. Errors not revealed by the trial balance. This is the second part in a series of 4 lessons on the limitations of the trial balance and the suspense account. Part 2 has been divided into 2 segments. So today we look at the first segment. What are the lesson outcomes? By the end of this lesson, you should be able to explain the errors not revealed by the trial balance, as well as prepare journal entries that are necessary to correct errors not revealed by the trial balance. So what are errors not revealed by the trial balance? Errors not revealed by the trial balance are those errors which cannot be detected by the trial balance. What this simply means that even when the trial balance totals have agreed, there could still be some errors hidden somewhere in the ledger accounts. Therefore, a trial balance that has balanced should not be taken as gospel truth by an accountant, because a review of the entries and the arithmetic in the ledger accounts may actually disclose errors that could not be detected by the trial balance. What are the errors not revealed by the trial balance? Errors not revealed by the trial balance may include the following. Number 1, the errors of commission. Number 2, errors of omission. Number 3, errors of principal. Number 4, errors of original entry. Number 5, errors of compensation. Number 6, errors of complete reversal. Number 7, errors of transposition. That's quite a good number, and you need to remember all of them. Now the good news is there is a better way to remember all these errors, like they are right on your fingertips. Let's take a look at the next slide and see how best we can remember this. Let's take the first letter from the word commission. We take the first letter from the word omission. We take the first letter from the word principal. We take the first letter from the word compensation. We take the first letter from the word complete reversal. We take the first letter from original entry. We take the first letter from transposition. So when these letters are arranged horizontally, we come up with a word like this, COPCO. So if you remember COPCCOT, then you're able to remember all the errors not revealed by the trial balance. C standing for commission, O standing for omission, P for principal, C for compensation, the next C for complete reversal, O for original entry, and T for transposition. So with this, you have all the errors not revealed by the trial balance right on your fingertips. So what shall we cover in today's lesson? For purposes of clarity and for purposes of time, we shall only cover 3 of the errors not revealed by the trial balance. So we shall cover number 1, errors of commission, number 2, errors of omission, and number 3, errors of principal. The last 4 errors shall be covered in the next segment, which is part 2B of this series. Before we even delve into the nitty-gritties of the lesson, allow me to now just give you a question. So a question on the limitations of the trial balance may come in this form. This question says, show journal entries needed to correct the following errors. Include narrations. So number 1 is saying a check receipt of $3,000 from Chilumba was completely omitted from the books. The proprietor, that is at number 2, the proprietor withdrew $5,000 worth of stock for private use, but it was not recorded anywhere in the books. Number 3, a check received from Chabu, $1,000, was entered in Chalwe account. Number 4, a cash payment to B. Mwale, $400, was debited to C. Mwale account. Number 5, a purchase of a motor car by check, $50,000, was debited to the motor expenses account. And number 6, a check payment for $3,000 insurance premium for premises was debited to the premises account. And so these are typical questions that may come on this topic in the examination or for different examination bodies. And so it is very important that we understand the questions, and from these questions we should be able to identify what type of error each part question is examining. In that way, you'll be able to know how to correct the error. So how shall we progress? What shall be our approach to these errors? We shall approach this topic in this way in order for us to have everything simplified. Number 1, I want us to discuss the double entry principle through the eyes of addition and subtraction rules in ledger accounts. We are going to discuss double entry as rules of addition and subtraction in the ledger accounts. Thereafter, we shall look at the identification and correction of errors not revealed by the trial balance. So only after we understand the addition and subtraction rules in ledger accounts can we identify and correct errors in the trial balance, rather errors not revealed by the trial balance. Why am I emphasizing on knowing the rules of addition and subtraction? Why am I emphasizing on the double entry and knowing the rules of addition and subtraction? It's for this reason. Let's take a look at the rationale. Errors committed in ledger accounts will result in either an account having more value than it should have, or an account having less value than it should have. An error may result in over-adding or under-adding. An error may result in an account having more value than what it should have, and an error may result in an account having less value than it should have. So what should we do with this information? To correct an error, therefore, in the concerned accounts, what should we do? Well, we should subtract from the account that has more. If an account has more in error, what should you do? Common sense tells us that you should subtract. And if an account has less as a result of an error, what should you do? You simply add by how much it is less. And so this topic about the correction of errors and the suspense account, limitations of the trial balance, it is all about addition and subtraction. Subtracting from accounts that have more because of an error and adding to accounts that have less because of an error. Simply put, this is all about addition and subtraction. So if you know how to add and how to subtract, then correction of errors and the suspense account will be the simplest topic ever to you. It will be as simple as drinking. The addition and subtraction in ledger accounts should be done within the rules of double entry. Therefore, the rules of double entry provide guidance on the following. They provide guidance on how to add to ledger accounts and they also provide guidance on how to subtract from ledger accounts. We can also say that double entry rules are simply rules of addition and subtraction in ledger accounts. So all there is in the ledger accounts is adding and subtraction. And so someone may ask, but how do I master the addition and subtraction rules? Yes, you need to master addition and subtraction rules for 6 types of accounts in the ledger. These are categorized into 2. So we have assets, expenses, and costs, and then you also have liabilities, equity, revenues, and gains. So you need to master the double entry, or rather the rules of addition and subtraction for accounts of assets, liabilities, equity, revenues, expenses, and gains. The following are the rules that I want you to master. You need to master this like the palm of your hand. Let's take a look at this. Let's take a look at this. I have in this table, in column 1, type of account. In column 2, the entry to make if you want to increase or to add. And in column 3, the entry to make if you want to decrease, that is to reduce or to subtract. So this is the additional sign and this is the subtraction sign. So what is it that you must do in order to add to an asset, in order to add to an expense, and in order to add to a cost? To add to an expense, to add to an asset, you need to do what? You need to debit. And so debiting an asset simply means that the value in the account is going up. And at the same time, if you want to subtract from an asset, all that you do is the opposite. You debit the account. So the acquisition of an asset, the addition to expenses will be debited because they are increasing the value of an asset and they're increasing the expense. So to add to an asset, to add to an expense, you debit. And the reverse goes. To subtract from an asset, to subtract from an expense or a cost, what do? You subtract. So crediting in an asset account simply means that you are reducing. Debiting simply means that you are increasing the value. In the same line, when it comes to accounts of equity, liabilities, gains, incomes, and revenues, if you want to add to a revenue account, if you want to add to capital, if you want to add to liabilities, what do? You credit. So you credit a liability account if the liability is increasing. If an income, such as commission received, is increasing, you credit that account. And in the same line of thought, if you are decreasing equity, if you're reducing the capital, if you're reducing a loan, if you're reducing revenues, sales, you're reducing commission received, such, what do? You debit. So a debit in an equity, liability, or gains account simply means that you're reducing, whereas a credit simply means that you're increasing. So these are the rules that I need you to master. Well, let us simplify this. Let us simplify this. Let's take a look at the summary of addition and subtraction rules in the ledger accounts. We said that if you want to add to an asset, a cost, or an expense, you debit. And at the same time, if you want to subtract from an asset, cost, and expense, what do? You credit. In the same line, if you want to add to a liability, to an equity, and again, you credit. So, by taking the first letters from each one of these words, we can actually come up with a mnemonic. So this becomes very interesting. From this, we come up with two gentlemen. These are going to be our superheroes. They are going to save the day. So we have D from debit, A from assets, C from costs, and E from expenses. We also have C from credit, we have L from liabilities, E from equity, and G from gains. So we can come up with two words from these. These are the names of our superheroes, the gentlemen, Des and Clegg. Des and Clegg. So D for debit, A for assets, C for costs, and E for expenses. C for credit, L for liabilities, E for equity, and G for gains. Des and Clegg. Debit, assets, costs, and expenses, and credit, liabilities, equity, and gains. Now, let's take a look at the steps in correcting errors not revealed by the trial balance. What steps should we take in correcting errors not revealed by the trial balance? From the practical aspect in the industry, in the accounting office, the first thing that you do after discovering an error is to make entries in the journal to show how the correcting entries will be made in the ledger accounts. So this may actually include a narration. A narration is simply a reasonable statement that explains why the entries are being made the way you are making them. After generalizing, you now post the journal entries to the ledger. So this simply means making entries in the ledger accounts as prescribed in the journal. So these are the corrective entries being made right in the ledger accounts concerned. Now, for purposes of this presentation and for purposes of clarity, I want us to do things in reverse. So how are we going to do it? Step one for us will be showing how the error was committed in the ledger accounts. You need to understand how the error was committed. If you understand how the error was committed, then you'll be able to know how to correct the error. So we're going to show how the error was committed, and then number two, we shall make entries in the ledger to correct the errors. And then number three, we shall show the correcting entries in the journal, which is also referred to as generalizing. So these are the three steps that I want us to take in as far as the approach to this topic is concerned. So let's take a look at these errors one by one. The first one is the error of omission. What is an error of omission? An error of omission is an error where a transaction is completely left out, completely missed out, completely omitted from the books. In this case, there is neither a debit nor credit entry of the transaction anywhere in the books. It's completely missing. So, to correct such an error, all that one needs to do is post the double entry as it should have been done in the first place, since this double entry is missing. Let's take a look at this question. The first two statements are actually errors of omission. So we shall deal with these errors of omission. Let's take a look at the first statement. The question says, show journal entries needed to correct the following errors. Include narrations. So number one says, a check receipt of 3,000 from Chilumba was completely omitted from the books. So a check receipt, when you hear of check, what comes to your mind is the bank account. So a check receipt from Chilumba, so we have this person who is making the payment. So we have the check, we have the account that involves the check, which is the bank account, and we also have Chirumba account. Now, this statement is saying that there was no entry made in this in the accounts. Therefore, how are we going to correct this? Number one, we have identified the error that was made. No entry was made. So what should we do in order to correct this error? We are simply going to make the entries as they should have been done in the first place. And which two accounts are involved? The bank account for this check and also Chirumba account. Let's see how we're going to do it. This is how the error was made. The entry in the bank account should have been made on the debit side because this cash was received in the business. At the same time, Chirumba account, which is an account of a debtor, should have been credited. So what are we saying? The bank account is an asset account. To add to an asset account, we debit. Money was received. We should have debited the bank account, but it was not. So what should we do? We now make the entry. We add this to the bank account, the asset account. How? By debiting the bank account. Chirumba, an account for a debtor, was not credited. Debtors are assets. And so if the debtor as an asset is reducing, then what we need to do, we need to credit the debtor's account. Credit an asset account if it is reducing, if it is decreasing, if you are taking value away. And so Chirumba account should have been credited, but this was not done. So what should we do? We need to credit Chirumba account. So let's see now the corrective entries and how they should be made. So in this case, we are making the entry in Chirumba account the way it should have been done in the first place. And we are also making the entry in the bank account the way it should have been done in the first place. So this completes the double entry, and therefore this error has been corrected. Now, how will this be presented in the journal? It will be presented in this form. We shall say, to correct this error, we need to debit the bank account and we need to credit Chirumba account. So the journal entries are simply an instruction of how the correction must be done in the ledger accounts. So to correct the error of omission for this check that was received from Chirumba, we need to debit the bank account and credit Chirumba account. So this will be followed by a narration. A narration, as we said, is simply an explanation for the entries being made. And the narration in this case is correction of check receipt omitted. Let's take a look at the second statement. In the second statement, we are told the proprietor withdrew $5,000 worth of stock for private use, but it was not recorded anywhere in the books. This was not recorded anywhere in the books. So the proprietor withdrew $5,000 worth of stock for private use, but it was not recorded anywhere in the books. And so what two accounts are involved here? Let's identify them. The withdrawal of anything from the business for private use, for own use, for personal use, involves the drawings account. The drawings account is a reverse of an injection of capital in a business. And so, instead of showing the reversal of capital in the capital account, we prepare, or rather we open a drawings account. Therefore, the drawings account is debited with every amount withdrawn from the business, whether in kind or in cash, for private use. And what are we seeing here? What was withdrawn was stock. The withdrawal was in kind. And where is this stock coming from? This stock is being represented by purchases. And therefore, there are two accounts involved here. Number one, the drawings account. Number two, the purchases account. The purchases account is an account for costs or an account for an expense. So if there is a reduction in stock, then we're reducing purchases. If we are reducing an expense, what do? We credit. And if we are reducing an injection of capital through drawings, what do? We debit. So let's see how this was supposed to be done and how it was not done. In the first place, the drawings account should have been debited with the amount of stock withdrawn for private use, and the purchases account should have been credited, just like we have discussed. But those entries were not made. So all that we need to do is make the entries the way they should have been done in the first place. So we debit the drawings account and we credit the purchases account. If we are to prepare the journal entries, this is how they are going to look. Drawings should be debited and the purchases account should be credited, being the correction of omission of drawings. The second statement. Let's now look at the third statement and a different type of error. Number 2 is errors of commission. Errors of commission are errors where the correct amount is posted to a wrong personal account. So an error of commission involves personal accounts. Now, to correct an error of commission, all you need to do is make an entry to remove or cancel the one made in the wrong account and then make the entry in the correct account. So how should this be done? Let's take a look at the question and then identify how this should be done. So from this question, we are now concentrating on part 3 and 4 of the question. Let's look at part 3 of the question. A check received from Chabu, 1,000, was entered in Chalwe account. So as you can see, the names are quite similar. And the accountant made a mistake and posted in the wrong account. A check received from Chabu, 1,000, was entered in Chalwe account. So in the first place, what was the error? The error is as follows. We have the assumption here that the entry in the bank account for this check was done correctly. But it was in the personal account involved where things went berserk. And so, what are we saying? This entry should have been debited to Chalwe account. Rather, it should have been credited. Should have been credited in Chabu account, but it was credited in Chalwe account. So what are we supposed to do to correct this error? Firstly, let's identify how this error was actually made. A wrong entry of 1,000 was made in Chalwe account. This entry should not have been there. So what are we going to do? We're going to make an entry on the opposite side to cancel this wrong entry, and then we do the double entry. We complete the double entry by making this entry in Chalwe account. So we shall debit Chalwe account to cancel the wrong entry and credit Chabu account so that Chabu can have this entry made in his account the way it should have been done. So this is an account of a debtor who is making a payment. So the debtor, she is supposed to be credited because the debtor's account is reducing. Rules of addition and subtraction in ledger accounts. The debtor's account, which is an asset, is reducing. Therefore, we need to credit. So we are crediting Chabu account. If presented in a journal, this is how this error will actually be entered. We are giving an instruction to say Chalwe account must be debited with 1,000 to cancel the error made, and Chabu account must be credited with 1,000 kwacha in order to make this entry the way it was supposed to be done in the first place. We make an addition to this by writing a statement, which is a narration. Check received entered in wrong account, now corrected. Let's move on to look at the next error. The next error is error number 4, which is saying a cash payment to B Mwale, $400, was debited to C Mwale account. So B Mwale was making a payment, rather our business was making a payment to B Mwale. A payment was made to B Mwale. And so B Mwale was supposed to be debited. But instead of debiting B Mwale, because of similarities in names, well, the accounting clerk debited C Mwale. So what are we supposed to do? We are supposed to remove that debit entry in C Mwale and post it to B Mwale. So the mistake here is an entry was made in C Mwale instead of B Mwale. So we cancel the debit entry in B Mwale and transfer it to, rather we cancel the debit entry in C Mwale and post it to B Mwale account. How should we do this? Let's see how this error was made. 400 entered on the debit side of C Mwale wrongly, and this is the amount that should have been entered on the debit side of B Mwale. So to enter this entry, to make this entry correctly, what are we going to do? We're going to credit B Mwale account to cancel this wrong entry that was made in the first place, and then complete the double entry by making this debit entry in B Mwale. In this way, we have corrected the error. Let's see how this is supposed to be done in the journal. In the journal, all we're going to say is to correct that error, B Mwale must be debited with $400 and C Mwale must be credited with $400. Being correction of cash payment entered in a wrong account. Well, let's move on to another error. Number 3 is error of principle. What is an error of principle? An error of principle is an error committed when a transaction is entered in the wrong class of accounts in the general ledger. There are different classes of accounts. So if you make an entry for a particular transaction in a wrong class of accounts, that is an error of principle. For example, if you treat an expense as an asset, or you treat capital expenditure as revenue expenditure, or you treat revenue receipts as capital receipt, that becomes an error of principle. So how are we supposed to correct errors of principle? To correct such an error, one has to cancel, subtract, remove the amount entered in the wrong account by making an opposite entry in that account and then re-enter the same amount in the correct account. Let's take a look at the question. So we are now looking at question number 5. A purchase of a motor car by check $50,000 was debited to the motor expenses account. So there is an acquisition of an asset. The asset's name is motor car. It's supposed to increase by $50,000, and therefore we are supposed to debit the motor car account, an asset account, with $50,000. Alas, this was not so. we debited this to the motor expenses account. So instead of debiting this in an asset account, it was debited in the motor expenses account. Let's take a look at how the error was made. A wrong entry was made in the motor expenses account, debited with $50,000. Instead of this entry being debited in the motor car account. So what should we do to correct this error? We subtract this amount from the motor expenses account by making a credit entry in the motor expenses account and completing the double entry by making this debit entry in the motor car account. So by these entries, we have removed the wrong entry made in the expenses account and made the correct entry in the motor car account. How is it supposed to be presented when it comes to the journal entries? Here are the entries in the journal. We are simply saying to correct that error, we debit the motor car account and credit the motor expenses account. And we add a narration, a correction of error where purchase of motor car was debited to motor expenses account. Let's move on to look at the next question. The next and the last question is a check payment for $3,000 insurance premium for premises was debited to the premises account. So here we can see that there is an expense that was incurred, insurance premium specifically for premises. This is an expense, but it was entered in an asset account, the premises account. So what are we saying? We need to remove the entry that was made in the premises account and enter it in the insurance premium account. So to remove something from the premises account, which is an asset account, the rule is to subtract from an asset, you credit, and to add to an asset or to an expense, what do? You debit. So let's look at how the error was made. This entry was wrongly made in the premises account and it should have been in the insurance premium account. So we're going to make a credit entry to remove this error that was made in the first place and then complete the double entry by making a debit entry in the insurance premium account. The insurance premium account is an expense account. It should have increased when this expense was made. So we are now making it to increase with this 3,000 kwacha. And so we subtract from the premises account, which is an asset account, and we make this entry as an addition in the insurance premium account. How is this supposed to be done in the ledger, rather in the journal? In the journal, all that you need to say is you must credit premises account to remove the error, and you must debit insurance premium account to correct the error. This being the correction of payment for insurance of premises entered in the premises account. So, presented holistically, this is how the journal entries will look like, and this is what is expected of you. There are some questions where you're not required to make the journal entry, rather to make narrations, in which case you remove the narrations. But for purposes of the clarity and understanding of this topic, I thought that I should add the narrations so that in questions and in those examination questions where you're required to show the narrations, you will be able to do the right thing. This is where the lesson ends. Please look out for part 2B of 4 in this series, where we discuss the last 4 of the errors not revealed by the trial balance. And to be covered in the next video, we shall have errors of original entry, errors of compensation, errors of complete reversal, and errors of transposition. Thank you for watching this video. I hope that you have benefited from the lesson. To watch more financial accounting videos, subscribe to my YouTube channel, The Accounting Tutor, Richard Fisonga, or like my Facebook page, Richard Fisonga, Teacher Tutor. Thank you so very much. God bless you.